Hello traders, it's 8:02 a.m. Chicago time on the first day of August 2018. It's Wednesday. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning's market stance, we had an interesting close in the indices going into the Apple announcement yesterday. The S&P is up 2.5 points depending on where you finish your day. 2.5 points from settlement. The S&P is actually lower based on the closing print at the pit close. The overnight session pushed us down to 28.10 in the S&P, but overall, it seems like today is moderately risk off. I'm seeing a mixed bag. Crude oil taking a hit. Crude down 1.47%. This morning trading at 67.75 in a September contract, down $1.02. Followed by the bonds, which are down 28 ticks. There's chatter this morning about the U.S. Treasury having to adjust its issuances, especially on a 2 and 5 year. Where the U.S. is looking at taking on more debt than had been planned. So that's what it seems like. The Nasdaq has popped. It's up 26 points, trading at 72.71. And like I said, it's a mixed bag. We're in the S&P. We're in the middle of yesterday's range in value. The profile is quite balanced from yesterday, even though we pushed up. Here's what we expected. And also, just a review of just a quick look at what could interrupt our auction this morning. We did get ADP employment today. We ended up with ADP. Where are we? With ADP, we ended up getting 219,000 versus 186. Now, remember, in 2 days, we get non-farm payrolls or the unemployment in the U.S., and ADP has sometimes been an accurate precursor to that release, and often it has not. So take it with a grain of salt. At 9:45, we get U.S. manufacturing PMI final for July. At 10 Eastern, we also get the ISM manufacturing for July, expecting 59.3. The big one today, the driver today, is the FOMC rate decision at 2 p.m. Eastern, expecting 175 basis points on the lower bound, 200 basis points on the upper bound, basically staying steady with previous, not an increase, no increase expected. So that's where we are. You should have sound. I'm seeing sound. Anyway, here's what we expected yesterday. Yesterday, this was interrupted with news right after the trader bite of talks between higher level officials in China and the U.S. regarding doing what they can to avert a trade decision, a trade war. So what this did is it essentially shifted these scenarios up. We ended up pushing the SOC for that was 2808. I don't recall what the SOC is, but we ended up shifting up and opening higher. So we'll see that in a minute. But just remember the direction. Yesterday's secondary scenario is the one that played out. Yesterday we also ended the one-time framing down with a higher low and a higher high. The scenario one did not work out. Here's what we actually got. Yeah, it was 2808 on the China trade talks. We ended up opening at 28.12.75. Market was completely sideways, weak high in the morning, started out sideways and then started to move upwards as scenario 2, except everything shifted upwards. Scenario 2 yesterday was expected to test and just breach 21.75, 28.21.75. And yesterday actually pushed to the next stock zone up at 25 even. So that's what we got with the break of the prior high. The day time frame is broken to the downside, and the downside date time framing was broken to the upside, I should say, and we're likely to go into balance today. Yesterday's profile, pretty okay taper at the top, okay taper at the bottom. Point of control, VWAP, mid, right on top of each other. Okay, right on top of each other. So overall, I'm expecting the market to hold steady in yesterday's value range, which is 28.21.75, down to, well, let's pull up the numbers. Come on. 28.21.75, 28.13 and a quarter. Remember, 28.18 is big. I covered that yesterday. That is the key low volume node in this area. 28.18 and a quarter. And what I said yesterday is if we push through 28.18 and a quarter to the upside and hold above there, which we did, we tested below and we finished higher, and we hold above there, we're right around there right now, then we're likely to continue to push higher. So yesterday's range was okay, about 17 points. I'm expecting us to be stuck in yesterday's range. I'm expecting a retest of the high of 28.25, and then I'm expecting us to just kind of go into a lull until FOMC, because it's hard to justify a big commitment by the higher time frame on FOMC coming out. So on the reopen yesterday, remember we got Apple. On the reopen, the market dropped. We had a pop up, the market dropped, and then we just have been sideways since. So we have a long liquidation type profile in the overnight, a B shape. The point of control is below mid, the market's below mid and is testing up, and has a fair amount of work to do to the upside. So that's where we stand on the overnight. The volume overnight's pretty high again, so expecting some pretty decent activity coming into today. The market's definitely got the attention. This morning, the scenarios. Primary scenario, looking for, since most of the overnight inventory is mostly short, the overnight scenario is looking for an open auction that tests slower. And then I'm looking for an impulse higher. I'm expecting us to hold this 28.18 and then eventually push 28.25 for a test of the overnight high before the FOMC makes its appearance somewhere in here. And then from that point on, I'm expecting a break higher on the FOMC. If rates remain the same, then I'm expecting participants to bring us back up to this upper distribution, as I mentioned yesterday, with 28.35 and a quarter being a key target. 28.35 and a quarter is the MC point of control in this area. Okay, the secondary scenario is pretty much the same. Open auction, test up, test down, and then basically sideways until the FOMC. And then really for scenario 2, it's anybody's guess. Most likely to the upside on scenario 2. On FOMC, I tend to just worry about the trading that may take place up to the FOMC release. This is a good day, by the way, to watch the first 20 minutes, trade for the next hour, and then go do something else until about 1:30 Eastern or so. Come back, see what the market's doing, reassess, do another trader bite or whatever you do to prepare, and wait for the decision. I want to remind you that the FOMC, just like all major figures, have a tendency to respond. So if the market's trading right here, there's a tendency to respond. So that's first wave. Then it overshoots on the next wave, and then the true move is the third wave. That's the true. So what you have here is the algos getting in early, then you have a pretty violent retracement generally, and then the true participation move is the third leg. So 1, 2, 3. Okay. So that's what I pay attention to. I look for collisions on my bookmap. Some of you are familiar with that term. I look for collisions on bookmap. I'm looking for pullback and how it treats the collision on the release, and then look for the next leg and then trade from the direction of that next leg on the main announcements like FOMC and non-farm payrolls. The overnight session had a ton of releases. PMI manufacturing came out for all the major economic powers in Europe, and I believe they disappointed mostly. And here we are holding steady near the upper end of yesterday's range. So this leads me to lean bullish, and the expectation is we take back the thin portion of the 27th. This thin portion of the profile is likely to be retested today and back up to here. All right, so this is looking like a very, very messy chart, but just relax today and look for look for some repositioning 20 minutes in, and then you really should take a break after about an hour into trading or so. Okay, good luck today, and I'll catch you tomorrow morning. Take care.